listen and memorize the songs. Okay.
Nothing political here.
Nothing political here, okay? Welcome everybody to our next episode with 3 stories. Today is the same 3 of us.
Yeah, I'm still here.
Yes, we're still here. Today's topic is about CCR, whether is it a gold mine or a land mine in 2025. So the reason why we've been looking or we decided to do a video on CCR is because there's been a lot of talk of the town, especially in like both resale and the new launch market in 2025. So we decided to dive a little bit deeper to see if what the news out there are saying coincides with the actual data and facts. Okay, so to start us off, disclaimer again, whatever that we're sharing just for informational purpose, whether it comes to making a decision or whatnot, always speak to your trusted real estate consultant. All right. Moving on, CCR, RCR, OCR. What exactly are we talking about? Jason, do you think you can walk us through?
A bit of a part of debate. About CCR, RCR versus OCR, because traditionally, of course, CCR is within the core central region. That's why it's named. Okay. There's this belief that it's the best location. Anything that is within CCR is the best, and anything that's outside is not the prime Singapore location.
Right.
Okay.
So CCR, RCR, OCR, as the name tells you, CCR is core central region, RCR is rest of central region, and OCR is basically the outskirts of Singapore, which is outside central region. Yeah. So from what we are seeing on the screen right now, you can see the black line demarcates where OCR is. So anything that is beyond that black line, you can consider it as outside central region. So this middle portion is classified by URA as central region. So central region is split between core central region and rest of central region. And core central region is those in the color of orange, blue, and pink, which is your Bukit Timah area to your Orchard Novena area.
And Sentosa, wow.
Yeah. Pink is Sentosa, and then blue is kind of like a bit of a Bugis all the way towards the bit of the CBD, Marina Bay, Tanjong Pagar area.
Okay, interesting.
So core central region, RCR, OCR is basically how URA classifies Singapore so that they can make their planning decisions.
Yeah. Right. Okay. So based on these and your understanding as well as being agents on the ground, right? What are your personal, opinions when you hear the term CCR, or if your client is asking you today, like, should I purchase something in the core central region? Like, how would you respond, Christine?
I think majority of the buyers, I mean, you viewers out there, y'all probably have this thinking also, this concept, which is CCR, expensive. It will definitely not be in their priority. Maybe it might be in their property goals, for example. Like, I want to buy a property in Orchard Road, for example. So then that will be a goal rather than something that they can do in that sense, because their mindset is expensive.
Right.
Aspirational lah.
Yeah, aspirational. A bit out of reach. But is it really true? Later we'll explain more in the video. But something very interesting, because just now you mentioned that actually Tanjong Pagar is also part of CCR as well, right?
Yeah.
But if you take a look at the colouring, right, of just now that map,
okay.
Do you know that actually some places might feel that, like, so parts of Tanjong Pagar are actually not in the CCR area?
Okay.
Yeah, so like Pinnacle of Duxton, also $1 million HDB flat, it's walkable to all the Tanjong Pagar area, the MRT station and everything, but it's actually demarcated in RCR.
Okay, interesting.
Which I think brings up a point about these classifications, is that actually sometimes the classification might be a hard rule, but like rule is dead and human is alive. So something like you said, across the road could be CCR, and then across the other side could be RCR as well. So whether to use CCR as the blanket statement to determine whether this is really prime location, I think could be a bit not so ideal.
Yep. And also we are seeing that like 2025 is a year where if you look at YouTube video or you have agents friends who are talking about it, there seems to be a lot of hype. But the question is, why is there a hype now? Why not last year, 2 years ago, and whatnot? Yeah.
Yeah, I think first of all, it's really because there's a lot of other launches that is within CCR itself.
Yeah.
Just this year lah.
So,
Just this year itself.
Okay.
Yeah, because back then, if you compare last year and the year before, there could be periods of time where maybe developers are not so into CCR yet. So previously, when they were bidding for land, they might be a bit apprehensive.
Yeah.
Especially because historically, in the past few years after COVID period as well, where all the properties went up, CCR didn't do as well
as them lah,
Yeah.
right? Right. And would you think that because of that, then the prices of the CCR market, like how has it been so far?
Yeah, I think right now, something that has been mentioned in the market is this price gap, right?
Okay.
Yeah, this narrowing of price gap.
Right. Oh, is this the one that you're talking about?
Yeah.
Okay.
So mainly we know that CCR is more expensive, a bit more aspirational, and OCR definitely is the more outskirt one. So traditionally is that I would rather stay in a more prime area, and the prime area will be more expensive.
Yeah, there's that premium you have to pay lah.
It's for the central location lah. you could say.
Correct.
Okay.
But somehow in the past few years, that has shifted a little. Somehow when you compare, you ask buyers, right, would you rather stay in Orchard versus would you rather stay in, let's say, somewhere in the east?
Katong.
Yeah.
Somehow,
The
in my
appeal,
experience, most buyers would rather go to Katong than Orchard.
Interesting. Yeah. Why do you think? Why do you think so, Christine? Why do you think so? Like,
I think a lot of the younger people nowadays go for lifestyle, go for vibe. Yeah,
Okay.
so to them, Orchard, yes, it's very nice, it's very luxe and very polished, but maybe if they are going to live in the area, they want somewhere more livable and
more
yeah,
local amenities.
probably, yes, something that they would
affordable
prefer.
food.
Correct.
Is that
Yeah.
right?
In fact, I have a client who he currently stays in Orchard itself. Bought Orchard because of aspirational factors, say like walking distance to Somerset. So when he and his wife was looking at a second property as an investment property, he made a comparison because like one beders in Orchard, you could is about a 1 million-ish range. In comparison to some of the RCR locations where you could be getting two-bedder. Yeah. But the downside is the Orchard one is freehold and then the two-bedder out there is leasehold. To him, it's like, if I can get a freehold property in Orchard, definitely it'll be much
No-brainer,
better. No
yeah.
brainer.
Yeah.
Yeah. But this was his mindset at the start before he
met
met
you.
me.
Whoa.
And it took about 2 years of sharing of research, sharing of opinions and thoughts. Then he realized, actually, if I'm looking at it from an investment standpoint, the market is
Doesn't
not
matter.
so receptive about freehold properties in the CCR area or Orchard area.
especially one bedders or whatnot.
Especially
Yeah.
one beders. Eventually, we bought something within the OCR.
Oh wow!
Yeah,
All the way
two
to
bedroom.
the-
Wow, that's
Yeah.
a very big jump.
So eventually, his mindset shifted also.
Is it also probably because that in the 2 years that he's waited, initially he could have gotten an RCR two-bedder and then 2 years become OCR.
But
he waited too long.
To be fair, at the start, 2 years ago, he didn't have the means yet.
Oh, okay. Fair
Yeah,
enough.
so within the 2 years, it was also a bit of waiting plus accumulation of finances.
Funds and all that. Right. Okay.
Yeah.
Okay.
Interesting.
So right now, today's market, 2025, what we are seeing is that because of the depressed CCR prices in the past few years, somehow the gap between CCR versus RCR and CCR versus OCR is getting narrower and narrower.
Okay.
So from what we see in this chart alone, back in the highest point will probably be in the 2018-2019 period, before the whole market went on an uptrend. CCR versus OCR was about 112% difference when you are buying a new non-landed, which is a new condo.
Okay.
So back then basically means that if you got the money to buy a CCR, you can get the double the size in an OCR.
Okay.
If you can only afford in OCR, you don't need to think about CCR. Then back then, RCR versus CCR is about 72%.
Okay.
Fast forward right now, we are seeing the gap. CCR versus OCR is about 25% and RCR versus CCR is 11%.
So you're saying that, for example, if I am currently staying at, let's say, Jurong West, which is like OCR.
Yeah.
Okay. There is a much, like at this present moment, is a lot easier. Almost four times more easier for me to upgrade all the way to a core central region location to top up a little bit more for the same size as compared to like 2018, 2019, where I have to double and put in twice the amount.
Yeah, so back then you had to double. Now you just maybe a quarter more.
25% more lah, per se.
Yeah.
I think definitely it will be a great opportunity for people who wants to kind of move into the central core region with this narrowing gap.
Yeah, I think that's a very good point because I do have friends who are staying in the OCR area and they are actually trying to get their kids enrolled into certain schools that is within 1 kilometer of the core central region, such as our popular ACS, RGPS, Nanyang, etc. And during the COVID period, I recall when we were talking about this, right, when the kid like just come out a few months old at the time, it's almost like impossible and like, wow, I need to like sell kidney, sell liver, that kind of thing. Man. But now like you sell like one finger. Now it's like,
Who buy the finger?
Yeah.
now like,
I will cut
wow,
my
can like suddenly it becomes a bit more tangible already.
More achievable lah. Yeah.
Yeah. And this is just on the PSF gap. And if you look at the average price gap, yeah.
Just to put it on a price quantum perspective, for CCR, the average price, let's say end of last year, the average price of a unit is about 2.5 million.
This is what size is this?
No, this is the average.
Okay.
Overall average.
Oh, so from like 1 to 5 with the...
Yeah, correct.
Okay, got it.
So then this doesn't take into factor like in which area there's more 1 bedder, 2 bedder, 3 bedder, that kind of
just
stuff.
as a whole.
Yeah, as a whole.
Okay.
Then that's why you can see 2.5 versus 2.4 in the
Wow,
RCR.
that's insane. Like the...
Is the mud as well?
Wow.
Yeah.
So you just... In short, if we top up, in this case like $40,000, you could get the same unit type in
CCR.
a better so-called location.
So-called better.
Right.
Enjoying the video so far?
Let him know by liking this video, sharing with your friends, and
Subscribing to our channel. Okay, let's go back to the video.
Oh, wow. So this is the price gap over the years.
Yeah.
I see.
And exactly, you see the gap in, let's say, 2005, 2006. Basically, the green color one is where the gap is huge. Where the
Crazy.
upgrade, you need to almost double the amount of money that you have in order to upgrade from an RCR to CCR or even OCR to CCR. Then, pew, 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 you see now red color.
In such a short period of time, I would say. I mean, don't look at 2000s. I mean, if we look at like recent years, it has dropped significantly. If I just take a look at like 2017, you can see like 32.9%, and then now it's like almost half.
Yeah, exactly. So even across the last 25 years, now might just be the one opportunity if you really, really want to stay into CCR. That's where it becomes a lot more affordable.
Yep. And so I think, right, like we've just like how now is a very narrow price gap, right? I'm sure at the back of like a lot of people's mind is that, okay, now it's like low, like prices like low, right? The thing is, if I were to purchase, will it go up? Or is it because like the reason why it's low now is because it's going to go even lower?
Yeah.
Yeah. So like, what do you think about it?
I think same thing, it boils back to the private market, like in general.
Okay.
Like government will not allow for it to fall below a certain like growth.
Okay.
Or like,
It's a baseline.
Correct.
Okay.
It's a baseline that the government definitely will have.
Okay.
If it does go beyond baseline, they also have many ways that they can actually pull up the
back the
prices
prices.
again. Yeah, with all the cooling measures and things.
Okay.
But I think another thing to think about is because now currently there's a very narrow gap, right? So all the RCR people have the opportunity to bounce up to CCR. And what happens is when more people bounce up to CCR, this will start to grow as well. And then the gap will start to open up. And then that's when then the OCR and RCR come closer. And then, you'll be like
It's somewhat like a wave.
Yeah,
lah,
correct,
always.
like a wave in
like
that
one
sense.
pushes another,
Correct.
etc.
That's my take. So
Okay.
I would think that, I mean, if you look at the chart also, since just now, it's not permanently either yellow or green or red.
Yep.
Yeah. So there is that push factor that it will ripple through. So it's kind of like a nice time for you to jump on that boat and then catch that wave in that sense, I feel.
Okay. Same thoughts or?
I think personally for me, I feel like use CCR-RCR, OCR as a gauge rather than a formal classification to see where is a better location. Because I think there are a lot of CCR properties that it's better location, but there are others that is not so good also. So when I look at it is, I want to first understand why were the prices in CCR on the downtrend in the past few years.
Okay.
Which leads back to demand. Who are the ones buying CCR? Some might say foreigners would comprise of a huge bulk of those driving the CCR properties. But I think it's also, in terms of a local demand, it's a bit shifting away as well. So on a future, like where is the prices going to be like for CCR? I think it depends on that CCR location that you're looking at. Would there be increase in demand in future, which comes back to a lot of factors that affect the real estate price, which is like location, your amenities, your schools and whatsoever. So I would say likelihood is some areas in CCR will probably still have depressed prices, whereas some areas might just be seeing renewed growth in prices as well.
Yeah. And also I think one thing that viewers also is important to take note is that CCR itself is a very big classification. Like as per what Jason mentioned, even within this region, there are a lot of small districts within the region that has like different type of demand and different type of supply. So I don't think it's like as fair as what to say that like we want to classify like CCR as a whole, because like Sentosa is under CCR, but we don't see as many transaction volume over there. So I think for viewers out there also, for your own due diligence, just take note that you can't just take an overall price index of the region and take it that, okay, this is across the board.
No one size fit all.
Yeah, correct. And I think a lot of, or maybe even agents themselves are not aware that actually, because one of the reasons that drives the RCR prices up is because, as per what Christine mentioned, right, there are a lot of areas in this like central area that are not classified as like CCR, but is under RCR. So although the location is superb, just based on classification alone is under like RCR. So one example would be like Canning Hill Pierce or like the Landmark or like One Per Bank, for example. These are developments that seems to be in the city center or even the latest One Marina Garden. City center, Marina Bay, just off your head, you would think that that seems like a central area. But under the URA classification, it's actually under a RCR product, which contributes to the driving factor of the prices, hence the narrowing price gap. Yeah, so just take note, do a little bit more homework. Yeah, or you can find us. We have done the homework. Let's say today, if you are serving a buyer looking to buy into CCR, would you then recommend to purchase a resale property or something that is brand new, since like this is the talk of the town of 2025?
What do you think?
I feel like, okay, so I've also had experiences with a client selling his CCR property as well. It's a property that has been selling
a lot of client with the CCR property to sell, but all like difficulty selling.
Yeah.
My OCR client don't have so many difficulties.
Viewers out there, if you all don't know, Jason like challenge. So if you have very
You have to go and
difficult
challenge him.
property,
He has a lot of property Google credits.
Yeah.
Okay.
Truthfully speaking, this property is within CCR itself.
Where is it?
And it's at Marina One. Yeah, so
I like
if
that place though.
viewers
Nice
don't
nice
know, past few years, Marina One's price point has been on a decline. So this client of mine, he's happy to sell off at just break-even price. Don't even need to profit.
How long has he held the property for?
So he's held it for a couple of years. He bought it slightly before COVID. And there was actually a time where
Before COVID,
if you bought anything,
But
Yeah.
before COVID and he
you
sell at
chances
break-even.
are you will earn. Yeah. So back then, somehow developers had discount for this property, and I'm not sure because he didn't buy it through me. His father's real estate agent pushed this property and saying that, oh, this location is great, it's prime. Definitely you can get rental. So plus developer
the
had
rental quite
discount.
strong or no?
Okay, so rental wise, I would say there's constant rental demand. But when you look at it from a rental yield perspective, where it's all about the ROI as an investor, it's actually not as strong as some of the OCR properties out there in the market. Yeah, including the one that my investor buyer who wanted to buy CCR eventually went to buy OCR. The rental yield has significant disparity. Yeah. So because of this itself, CCR wise, right? I also, because of that listing, I met a few of the buyers. Asked them about why they are buying, also to understand their motivation to potentially try to sell this unit to them. And the truth is that there are a lot of buyers who do want to stay in that proximity to work, for example.
Yours is one bedder lah.
One bedder.
Okay.
Yeah, one bedder, one bed study.
Right.
They like walking distance to work somehow.
Okay lah, makes sense lah. Okay.
So it's an aspirational property.
Right.
They don't mind buying and staying it for a long period of time.
Okay.
Not so much concern about future investment value or whatsoever. Don't plan to, not
And it's a
necessarily.
99 year, right?
It's a 99 year.
I see. Okay.
Yeah. So Marina One itself, they won a lot of awards.
Yeah, it's very nice.
Yes.
Very
Yeah,
nice.
very nice.
I frequent that a lot as well.
There's the standing sushi bar there also, if I'm not wrong.
Not sure.
No,
Downstairs,
I may be wrong.
basement.
Basement, right? Basement, right?
Yeah.
Yeah, I've been there before. Okay.
Yeah.
Look at me like wrong like that. 我吃饭的在那边. Okay.
Yeah, so there are some buyers who really like that, and right now it could be an opportunity for them because previously in the past few years they might not have been able to afford it. Only in the past, right now because the prices have on a downtrend, that's where they can potentially buy into it. And we don't know how long this downtrend can be also.
And it's a really nice development, definitely. Like the whole design and the landscaping and
nice.
all.
Yeah. So I would say for buyers who really aspire to stay in these CCR regions, have been a dream of theirs, not so concerned about will the price
Growth
increase
or
or go down.
Click onto Jason's listing, make viewing plans.
Still selling
Still selling.
Wow.
Still selling. Because unfortunately right now most units are selling at a loss. Not even at a break-even price. Yeah. So for some buyers, resale might be an opportunity for
right.
them.
I can help you sell. So Marina One actually have 3 MRT stations that is within walkable distance. So the red line, the TEL line, and also your downtown line.
Awesome. Thank you for that commercial break. Okay.
Come back.
Yes, let's come back. So with regards to that, okay, so like you're saying that, okay, so resale, there's quite opportunity. And then what about like new ones? So we are going to actually dive into some new developments that are coming out in 2025. And I think this is important to take note for viewers. Like if you are looking at something that is brand new, this information will affect whether you choose a new or a resale. Okay, so maybe Christine can start us off with a first project.
Okay, so we kind of like each took on one spot that we feel that there is potential.
Interesting lah.
Yeah. So all in all, it also depends on how the developer will be pricing the project and things like that also lah. Okay.
Yep.
So the one place that I'm looking at is actually at Holland Drive. So to let you guys know where this location is, it's actually right at the Holland Village MRT station.
Okay.
Beside the new One Holland Village
Residences?
residences and also that new
The
mall area.
Nice.
Yeah. So this is just that L-shaped one that is right beside it.
Yep.
So probably first thing that actually caught my attention was actually that this is actually the last plot of residential private residential plot for the Holland Village area lah. So if you take a look around the area, right, it's either the landed or even the HDB. So that one last space is the last one there.
Right.
And also, I mean, the first GFA harmonized one as well.
Okay,
Yeah.
interesting.
So another interesting thing to note that this new plot actually has 680 units.
Wow.
Yeah, as compared to the neighbor, which is 296 units only.
Wow.
Yeah, so development-wise, this one will be larger than its neighbor.
in terms of residential units.
Yeah.
Okay, interesting.
Yeah. And the last and most important thing that I found was, so looking at 2024 bid for Holland Drive, right, they actually only have 3 bids as compared to the neighbor One Holland Village Residences with 15 bids. This also kind of relate to what Jason mentioned about like the developer sentiments as well. They are probably now a bit more cautious because if you look at the bidding price as well. Yeah. So for One Holland Village Residences, they actually, the amount actually came out to $1,888 per square foot
Ouch.
per plot ratio.
Back in 2018.
Yes, back in 2018. So that is actually during that period really high.
And developer is... You
Don't
know.
need to say.
Okay.
Yeah.
But I must say, One Holland Village Residence, having a couple of units there for sale and for rent, right? It is absolutely beautiful. It's super stunning. And kudos to the developer. Your service is super good. Like they will help you to like settle a lot of things. The staff there is super friendly, super professional. They bring you on a tour of the unit and the project when you take your keys. So it's like, wow, top notch.
Yeah, I mean, that's also
It's
why...
1,888 PSF per plot ratio of top notch.
Yeah. So Holland Drive actually, after bidding, the price came up to 1,285 per square foot per plot
significantly
ratio only.
lower.
Correct. It's 31.9% lower. Yeah. So what does that even mean, right? So if you take a look at One Holland Village that time, they sold at an average of 2,800 plus per square foot. Yeah, so for Holland Drive itself, we look at the break-even price. It's at 2,200 thereabout. And if, let's say, just for estimate for this comparison, we take a 30% profit margin, average estimated will be there about also 2,860.
Wow, even with a 30% profit margin.
Yeah.
Yeah.
And you need to consider that Holland Drive will be GFA, so likelihood the quantum will be smaller than One Holland Village because of the sizing will be smaller.
Correct. And I think another thing to note, not just that, is also One Holland Village. It's a property that is already almost coming in like 5 years as compared to this new one lah.
Yeah.
So yeah, it's definitely, I guess, something interesting that we can look out for.
Yeah, and also just for a fun fact, this Holland Drive development by UOL and Capital Land is likely, and I say likely, gonna be within 1 kilometer of the popular Henry Parks Primary School. While on the other hand, OHV, One Holland Village Residences, is not within 1 kilometer of the school.
Yeah.
So I think then this again would affect the demand for
Definitely.
own stay family kind of.
Yeah.
If it's in, it's a bonus lah.
Yeah.
Unlikely that they will have confirmation during the launch itself, because these days the launches they all
We don't know
dare
whether
to,
what school is what school.
they don't dare to give confirmation
Yeah, especially it's
anymore.
kind of at the fringe one. Yeah, but you just draw the map and you look at the map by itself. Yeah, it seems like it's so far lah.
So definitely something that when there's more detail, we also do up a more in-depth research. So do wait up for that video.
Keep a lookout for the video. All right, next we will look at Orchard Boulevard. Okay, so for Orchard Boulevard, interestingly, is actually located right at the doorstep of Orchard Boulevard MRT station.
And hence the name.
Yeah. Hey, but the development is not called Orchard Boulevard, okay? Because now the project name is out. But it's direct linkage to the MRT station. So it's like a mixed development integrated with the MRT station. So just some interesting facts which I will touch on, and I will, through this, right, it will slowly link to whether is it like more of an opportunity or whatnot lah. So UOL and Singland managed to bid for this plot of land at only $1,616 PSF PPR.
Cheaper than One Holland Village Residences.
Correct. And with that, right, the one thing interesting to take note is that it is only 2.46% higher than the next bidder, which means that generally what this means is the bidders have a rather close estimate of what they feel is a correct valuation to pay for this price point.
Yeah.
So I must say,
not overpriced.
Yeah, you don't pay like way above the second bidder lah.
You said UOL.
Yeah,
and
I mean,
Singland.
good lah, UOL Singland. Okay. And the project name will be called Upperhouse at Orchard Boulevard, and it will yield 280 units lah. So right, to dive deeper because we have been discussing whether you should buy resale or brand new, right? So this is a comparison of resale or brand new. So Upperhouse would be the new launch, and then the resale counterpart. The closest comparison that I can find would be Cascade Reserve. That is also a 99-year leasehold property because the rest are all freehold already lah. Okay, so TOP at 2023. So let's just take a closer look at it. For Cascade Reserve, right, the launch period, they actually hit an average price of 3,625. Wow, 我讲了我都怕. Okay, and back in June 2022, right, the 3-bedroom actually hit $3,830.
Wow.
Luxury.
Wow, and this is only 99-year. It's not even freehold in Orchard. It's insane. And this is the price trend. So the reason why the price trend, right, dive deeper than Joseph Schooling is because they actually relaunched last year in March at an average price of only 2,900. And as of yesterday, at time of filming, today is 24th of April, or early couple of days back, Cascade Reserve is 100% sold out.
Oh.
Okay.
Congrats.
Yay.
Yeah. Congrats.
Finally.
Yeah, but imagine if you are the first 12 units that bought.
Yeah.
Wow,
Imagine
emo.
you paying 3,000 plus.
Yeah, really emo. Okay. So the thing is, what is interesting to take note is back in also 2018 May, right? The developer actually got the land at an estimated break even of $3,200.
So they made a loss in some units.
Yeah. And that's why we don't see this developer anymore. But yeah, so as compared to Upperhouse, right, the estimated break-even price is only $2,652.
About 600 PSF difference.
600. Yeah. And this will also be a GFA harmonized land. So very similar to what Christine went through earlier for the Holland Drive. Yeah, and something to take note also that in this area, of course, usually for one map, you can't really, if the building is not built up, you can't search the school enquiry lah. But I searched up, down, left, right. There are no school within like 1 kilometer. So
You look left, look right.
Shishimimi. Hey, I went to like listen and memorize the songs. Okay.
Nothing political here.
Nothing political here. Okay.
我不知道
Yeah. So this would definitely affect the again the own state demand lah. So contrary to Holland Drive that has Henry Park within 1 kilometer.
Potentially.
Yeah, Upperhouse actually doesn't have lah. So yeah, something to take note. And the last one, we will have the highly anticipated.
This is an area, mainly because this place between Havelock and Great World City, there's actually 5 different land plots, 4 of which have been sold already. And one is still in the reserve site for developers who are interested, they can bid.
Wow.
So this area, you know how Lentor in the past few years have been a lot of condos coming up.
Yep.
I feel like this is like the next Lentor,
Whoa.
but in the
Upgrade.
prime area.
Wow.
It's an upgrade.
In a CCR. Okay, so something interesting about why I also feel like CCR classification is not so clear-cut is because when we look at Great World and Havelock, the CCR-RCR actually is separated, divided by just
The road.
the river.
Yep.
That shield, that river.
Yeah, the Singapore River essentially. With some exceptions later I'll dive into. But when we look into the different land plots, so what we see is those on the left is considered District 3. District 3 not CCR lah. So a bit more
So Zyon, Parcel A and B.
Yeah.
is the RCR.
RCR.
So more Tiong Bahru, Queenstown kind of area. But then when we look to the right side, those at River Valley District 9 lah, a bit more atas, they are considered CCR. Difference is really you cross one river. Yeah, so something.
Cross one river, the price point got increased or not?
So from what we're seeing in terms of how the developers bid the land, there is a bit of a difference. Of course, we don't know eventually when the launch price how it will be like lah. But from what we are seeing, how the developers bid the land, a bit more expensive when you're at the right side, the District 9 area.
Right.
So eventually, this area in the next few years will have more than 2,000 over units upcoming.
Wow.
Something interesting is also that in Zyon Road Parcel A, they have something that is new, which is called the long-term service apartment. So
What does it mean?
just to share, right now, service apartments, your minimum rental period is just 7 days, 1 week. For condos, it's 3 months. Yeah, based off URA guidelines. In these new long-term service apartments, they are changing the minimum stay to 3 months also.
Oh.
So that effectively competes with the condo rentals within the area also. It's additional supply, but cater to maybe more of the tourist crowd.
But it's like new, right?
It's totally new. So this is the first ever long-term service apartment. The other one that was at Upper Thomson eventually had no bids because developers are a bit fearful of getting their hands into this new thing.
So who's this developer that like, let's go?
Yeah, so CDL actually was the sole bid of this Parcel A.
big, like,
Yeah.
wow.
So they and Mitsui Fudosan, the Japanese developer, decided that they don't mind trying out this.
Fudosan.
I think this also gives a little bit of a competitive advantage because you set the price, the government determines whether they accept or don't accept. And in this case, the government accepted lah. Yeah, so that also gives the price gap in terms of the land bid, PSF, PPR. This is 1.2 compared to Parcel B just beside, it's about 1.3. And then the rest are higher at 1.3 and 1.4 also. Yeah, so how this will turn out in terms of our pricing, we have to stay tuned to find out. But this Parcel A definitely has something different. Long-term service apartment. You also have level 1 commercial as well.
Right.
Yeah. So this area, so far only River Valley Parcel A has a confirmed condo name lah, which is River Green. The rest are still to be confirmed, and we don't know when they will be launching, but likely River Green will be launching this year. Potentially Parcel A or Parcel B will also be launching this year. And this is something that for buyers who are looking to move into something that's more central but also within close amenities will be something more appealing. Yeah. So the unique location of this that makes it RCR versus CCR also could potentially result in opportunities, especially for investors lah. Because if let's say across the street, it's CCR, it's selling at a more expensive price, and then at the RCR on this side, it's cheaper. You can still have the same accessibility. Still the same thing, walking distance to Great World City, walking distance to an MRT. Instead of Great World MRT, you walk to Havelock MRT.
Oh yeah, and then you get like the direct kind of like...
Yeah, it's linked to the MRT also. Yeah. Then it also has hawker center, which in CCR areas relatively rare. Yeah. Here you have the Zyon Road hawker center.
Yeah.
Then you want greenery, you want PCN, Park Connector. You also have the Singapore River that links all the way down to Clarke Quay to Marina Bay. Yeah, so
nice, huh?
Yeah, very livable.
Yeah, and it's like relatively near to like the Tiong Bahru area as well. So you also get the Tiong Bahru cafe, market area.
Got school or not? I think have. River Valley
River
Primary.
Valley.
River Valley Primary.
It's a good school.
Yeah. Is it?
It is.
Every school is a good school.
If your child can get in.
Okay, carry on.
Yeah, so this area I think will be quite interesting, especially for people who traditionally maybe a bit apprehensive about going into CCR because CCR prime atas are not suitable for me.
Scary,
not very lifestyle that kind. I think this area might prove you wrong. Yeah.
I will stay this area. I think,
Okay.
if I can.
I'm still thinking about it. Not like I got the money, but I'm just thinking about it. That's what I'm thinking about it.
It's an interesting area. Not the
the
typical CCR.
Correct. It is different. It's different. Okay.
So then I think the last point also which makes it interesting for me is the comparison between the existing resale around this area. Okay. Another interesting thing which shows you why you don't use CCR and RCR as a main comparison is because even though CCR and RCR is separated by the river, Riviere is considered RCR, but there are 2 condos in front of Riviere that are considered CCR.
Yeah.
So somehow the classification cuts through that and Riviere falls into RCR.
As in, so the the area that you're mentioning is the one sandwich between the two purple.
Yeah, sandwich between the Zyon Road, Parcel A and B, and Riviere. Yeah, the Tribeca. Those are considered CCR. Yeah, so, but more interestingly is because Riviere and then closer towards the right side, Martin Modern at the River Valley area, they set like a benchmark of how much would people be willing to pay to stay and enter in this area. And Riviere, which TOP in 2023, Martin Modern TOP in 2021, people are paying between 2.7, 2.9 kPSF already. Yeah. So this year, with the upcoming CCR projects, I think the Zyon Road Parcel A would probably be close to this price as well. So if let's say the resale versus new launch is at an equivalent level, that could be something that's interesting for buyers, especially investor buyers.
Yeah, agree.
Riviere is the old Kim.
Yeah, Zoom. Right now they convert that into a warehouse with restaurants and all.
Nice.
Yeah. So yeah, keep a lookout for this area. A lot of different land plots. So some might be good buys, some might not be so good. Some might be landmines.
Landmines.
Yeah. Some might be gold mines, some might be landmines.
So to end it off, any last words for our viewers out there?
Last words. I think doesn't matter CCR, RCR, OCR, new launch, resale. Most importantly, you need to do your research. You need to know what you're buying into. Even within the same development, your entry price to the place, be it resale, new launch, is very important. So do have a chat, or at least if you can't research it on your own, have a chat and or engage an agent to assist you in this so that you are more confident in what you're buying into.
Yeah. And for me, I think right now with the price point in CCR, it could be an opportunity for some, but just be wary also. Just because it's CCR, it shouldn't be a definite buy or definite thing to avoid. What we see is that use CCR as a gauge, but do the more fundamental planning as well. Dive into the different analysis of each of the developments, as well as link that back to your own personal needs. Yeah, so there could be good opportunities within CCR this year, just that it's not going to be every single CCR property.
That's right. And in short, buy with a purpose. Know what you are buying and why you are buying it. And with that, we come to the end of today's video, and we'll see you in the next one. Bye-bye.